Tuesday, March 7th, market analysis, Stan Ehrlich. Good morning, 10:07 California time. So we do have almost 3 full hours left. Right now, the S&P 500 is in the process of closing or trying to close a small gap on the way up from last Thursday's high to last Friday's low. Remember, gaps are like black holes in space. They tend to suck the price action back into the gap area, the black hole. So no surprise, we're coming down to try to do that. Just yesterday, the S&P got very strong and at its highs tried to close a gap left behind when the market moved down on February 17th. Did not close the gap, came right up to the bottom of it and then slipped right back down to where we are. Please remember that we had a bullish engulfing on Thursday of last week, and that started the Friday rally and the follow through yesterday early. Not a very good close, and this morning we had some news, more likely than not, that has caused this break. Now, the exact gap closure price in the spider is going to be at, just one moment, 398.69. Call it 70, 398.70, and we're 99.50, less than a point from the exact gap closure. So dropping off another approximate 80 cents will do the job. What happens next? Supposedly, when the gap is closed, there's kind of like two alternatives. One of them, it just turns right around and heads straight back up again if we've got a good, strong market overall, and the technicals only provided the right spot for a bid or a new long, adding to your intermediate to longer term bullish position. Or it could slip off a little bit more. It oftentimes is not that exact. And as long as we don't get below the low of last Thursday, especially on a closing basis, the buy signal still is intact. And we did get an official ER buy signal, green daily bar on the E-mini and the micro mini, both, of course, they're almost identical. And that's intact. So here we go. Let me talk about the DIA for a moment. It's not exactly the same story, but we did get oversold last week on Wednesday. Thursday was the bullish engulfing, not for the DIA, but the S&P did, and I think the QQQs did also. So that's a bullish engulfing. Unfortunately, it wasn't quite oversold enough on those other two symbols, spider and Qs, to generate a green bullish engulfing buy signal. But almost all the criteria was there. So here we go up until yesterday's early high in a little area of resistance, nothing particularly profound about it, but modest. And we've pulled back down now a little lower than even Friday's low. And that would be needed, of course, to close the gap in the case of the QQQs also and the S&P. So we're still at 399.50 at the moment. I'm looking at another screen. Now, the QQQs are very similar to the spider, but it's not coming down as fast, and it's not getting close to the gap from last Thursday's high to last Friday's low. There's a gap there. It's not very big. So it has a further drop to come down and close that gap relative to the spider at the moment. So for that reason, maybe the spider is going to drop off a little bit more than just the exact gap closure to allow the Qs to come off a little bit more. Neither of which can afford to close below last Thursday's lows. That's the fail-safe. That's where I'm wrong. That's where I change my mind and make adjustments and get back on track. But we're coming close, should be, to a low that will and a few days later, make it above Monday's high, which is starting to have higher lows and higher highs on a shorter term basis. And the longer term basis is still very much intact. From October 13th whopper of a buy signal that we caught to the day, we have seen higher lows and higher highs. That's October, November, December, January, February, and now here's March. So half a year, basically. That's good news on an intermediate to longer term basis. But again, the last low that's important was last Thursday. So we don't want to get below that. We don't want to stay below that. And we can't afford to drop off any more than that low. Maybe a double bottom. But that's not even in the cards, is my opinion. Okay, let's go to futures. We've got corn that I've been talking about for a couple of weeks now. And we had a major downside breakout on the 28th of February on a closing basis, but we got oversold. So no surprise, we bounced a very modest amount, frankly, for about 2 days. And now we're slipping off here again today with a minor new low from yesterday and a little bit lower on the day at the moment. Nothing particularly dramatic. There's nothing here. We're not oversold, overbought, nothing new. So it could just slip on off a little bit more without causing any concerns one way or the other. This downside breakout last week should be very bearish. I am not going to be surprised in the weeks and months to come if it doesn't challenge the low back in July. Maybe even on a longer term basis lower than that. Next chart. Bonds, very important. If the stock market's going to come back up again, we want to see this rally. And that's exactly what it's doing this morning. But we're not seeing the indexes turn around. We're still 399.5 at the moment, almost at the low of the day, and a spider for the last 6, 7, 8 minutes. I am looking at the other screen. So whatever's causing bonds to go up, which is not unexpected, it was oversold substantially so only a few days ago and deserves a rally. Plus, we have support approximately causing it to turn back up as well. And that would be the little trading range back in October, November with the little double bottom back over here. The next move is for it to continue to rally, start helping the stock market bounce back real quick maybe, and chew into the resistance that we're going to have at 130 all the way up to 134. If we can start closing above 134, we have higher lows and higher highs over a significant number of months, and that defines a trend. In my book, I'd like to see that happen. I think it's going to happen. I'm trying to be as precise as I can, but that's the best I can do at the moment. 10-year notes next, I believe, is almost identical. Oversold condition, substantially so. So far, we're not getting another bullish green engulfing, but if today we manage to rally above yesterday's high, bingo, we will have a bullish engulfing green official buy signal. The last one on February 23 didn't work, but it's not unusual to see them cluster 2, 3, 4 in a month or less. So maybe. Next chart. We caught the bottom of the market here in natural gas to the exact day. That's why the ER signal was built. It's taken me a decade. I don't see anything wrong with this dip. I think we're probably going to see new highs in a day or two pretty quickly this week, period. That's natural gas. Next, the E-mini, of course, is currently at still 399.60, going no place fast at the moment. Now it's been about 10 minutes that it's been in a very tight little range right here, right above that gap. So we have an official ER new long buy signal that has already past tense worked, including a reaction down that ER3 loves to buy a retracement into the range. It's a mathematical formula we came up with of the green bullish engulfing. Back up it went perfectly. The next day, that was last Friday. Good profit potentials. Our trailing stop trails very, very quickly, recalculating every 60 seconds and moving the stop every 60 seconds if need be. That's very adjustable. It can suit long-term investors if you move the stop very slowly, or scalpers all the way in the middle. So we're more likely than not out. I don't show you the ER1 and ER3 transactions. They're on 1-minute charts. I might start doing that in a day or two, but for the moment, no. And since I started doing the YouTubes, nope. Anyway, pretty much low and last 399.50 still on the spider, and it may even dribble off some more to close that gap. Next chart. Wham! Buy signal worked in silver for a few days, plenty of profit potential. We got the retracement into the range of the green bullish engulfing within 1 and 2 days later. Then we saw new highs for the move up. Tons of time and room for relatively short-term scalpers or swing traders, more likely than not, to be able to lock in a profit. And I use that word lock loosely. If I still had a commodity broker's license or stockbroker's license I had for 35 years, I couldn't say that. But now I'm just an average citizen, and I got no licenses. Great. So I'm sure, made money with ER1 and or ER3 in the last few days. We're out. Even if you were stubborn enough to hold on for dear life and hope that the signal was going to be a good long-term one, you're still out, because our fail-safe stop is below the low of the green bullish engulfing. Next chart. You would have had a small loss in that case. Gold coming down pretty quick, quite a lot, but no total violation. Now again, ER1 and ER3 woulda, coulda, shoulda, and did, I'm sure, I just don't know the exact numbers, taken a profit already. And maybe this morning, because it opened almost unchanged and then started to hit the dust. The speed at which doesn't bother us much, because again, we recalculate every darn 60 seconds to move our stop if need be. Next chart. We've got platinum. That's the third precious metal in a row that we had buy signals. Both gold and platinum so far survive even on a long-term basis. But like gold, the stop, if you're using ER3 default inputs and the ER1, there's no way you would have lost more money on the ER3 especially. So we're out. And intermediate to long term, it better stop going down right here and turn back up again. Next, we got coffee. So I'm going to leave you here. I don't have too much to say about these other particular commodities at the moment. No signals, nothing I want to comment about. And I do want to wish you a profitable trading day. Current quote is still, oh, I can't believe it's going sideways so much. 399.51 on the spider. No place fast at the moment. And it's been over 10 minutes. Thank you. Mañana.